Well, joining me now to discuss the mix of global and local markets is Grant Gilburt, who's a stockbroking portfolio manager at Nedbank Private Wealth. Grant, thanks for your time.
Hi, Fifi.
I mean, we've been sitting here together in studio watching the proceedings take place there in Zimbabwe. Your take on what's happening there?
I mean, it's incredible. I mean, you can see all the jubilation after 37 years of Mugabe's rule. I'm just really happy for the people of Zimbabwe.
Yeah, they're happy for themselves too. Interesting story about the IDC and Oakbay. They want their money back because they believe, in fact, it's been proven or alleged rather that their share price and manipulation was Oakbay, which is no longer listed. But your take on that story?
I think it's quite interesting. I guess the biggest challenge for Oakbay is how they will be able to fund the 293 million without having a bank account. I think that's, of course, a big challenge. But I do think that it reminds investors about the risks of investing in illiquid shares. So you can manipulate the shares in a company which trading in those shares are very illiquid. And I think that's exactly what happened. And unfortunately, the IDC was involved in this deal, but hopefully they can get their money back. And
the IDC, but other smaller investors, like you say. So if you are looking at a company, you're trying to judge, okay, it's illiquid, it's not illiquid, how do you assess that?
Well, I guess you've got to look at the total market cap of the company and then drill a bit deeper to see how many of the shares are actually publicly traded, whether it's tightly held or whether there is actually a broad investor base.
Well, some company news are from bigger companies there that are more liquid, I imagine, the likes of Liberty, although they're warning that profits are likely to be lower.
I guess no surprise. I mean, the market really has been following their performance, and they really have struggled. We know there's been many changes at management level, and I definitely think that impacted their strategy over the last 12 to 18 months. And I guess in this market, the marketplace has changed very much. I mean, it is a really, really competitive marketplace. So to try and get new business is challenging. But luckily, the last 6 months, the markets have been quite buoyant, which will definitely support their assets under management growth.
So hard times now, but going forward, do you see better days for Liberty?
Look, I think we really need to see what the new management can come up with and what strategy they would follow. And if the market does stay buoyant, like I said, that will definitely support the assets under management.
And Exxaro looking to upgrade some of its facilities there, increasing capex by 50%.
Yeah, I mean, that's a big number, especially given where commodity prices are. So I guess the concern is the markets and the coal price and iron ore price have really increased substantially. So to be increasing your capex at this peak cycle, I mean, I guess a lot of investors will be querying if now is the right time to be doing that.
They're clearly confident. They believe now is the right time to be doing that. In fact, they cite support there from China's economy. Do you think that that economy will be strong enough to sustain going forward?
I think China's economy has been very, very resilient, and I think that's taken a lot of people by surprise. So I don't think it's a demand story. I think it's more you've got to look at the supply equation and whether or not those two markets are in oversupply and whether or not supply can come onto the market quite easily given capex that we've seen increasing over the last 2 to 3 years.
So how are you feeling about today? I mean, besides the big event in Zimbabwe, we are set to have a big event right here after the market close. How are you feeling about the outcome?
I think all investors are quite nervous. I guess what investors have been asking themselves, have we done enough the last 3 months to avoid a downgrade? And of course, as you mentioned in the start of the show, if we are downgraded fully by both of those two agencies, we will see forced selling in the bond market. I do think that we could see a knee-jerk reaction, and I guess what will be interesting to see is whether or not the market does recover. But it is really difficult to call, so I guess we'll all be watching the screens at about 6 or 6:30 tonight.
But we've seen marginal rand weakness creep in as well. I mean, the statement from Fitch, some regard it as being relatively positive because, yes, they kept us at junk status, but it could have been worse.
I don't read too much into that. I mean, they've already downgraded us to junk status, so the outlook was stable, but I don't think that's really going to have an effect on any of the other agencies. So I do think some traders and some investors are definitely hedging themselves ahead of the agreement. I mean, the rand has been remarkably strong the last 2 weeks. So to see it tick above 14, I'm not too surprised, and I think guys are just positioning for tonight.
Indeed, Grant, will leave it there. Thanks so much for your time. That was Grant Gilburt, who's a stockbroking portfolio manager at Nedbank Private Wealth. We are going into a quick break. When we return, we